Hello, I'm Bernard Hickey from Eurostoxx and welcome to 90 at 9. This is your morning briefing where you get everything you need to know in 90 seconds at 9 o'clock. Starting now with news, the Europhoria is back. European leaders agreed after a 13.5-hour summit late on Friday on a deal for direct injections of rescue funds from their European rescue funds into Spanish banks. Previously, Spain's government was having to borrow to put the money into the banks, and that was simply increasing Spain's sovereign debt. Now, this new deal is expected to give some relief to Spain at least, and there is talk of a European banking union, which would mean other banks would have access to these rescue funds. This essentially means that there is shared liability across Europe for Europe's banking system. However, it is going to take a while. They are saying they need a supervisory body set up first before they inject this money. And the rescue funds only have 500 billion euros of funds. Many people say this might not be enough. Remember, the Spanish and Italian debts are 2.4 trillion euros. And there's a desperate need to break this nexus between banks in trouble and sovereigns in trouble. The S&P 500 celebrated up 2.5% on Friday night, and the European stocks 50 up 5%. Commodities rallied 5.6% on Friday night. That's the most in 3 years. That, of course, pushed up the New Zealand dollar. It rose over 80 US cents and it's still there this morning. This week we'll be looking for decisions from the European Central Bank and the Bank of England to ease monetary policy again. The ECB is expected to cut its official interest rates and maybe do some more. The Bank of England expected to print more money. It warned on Friday night about stability in financial markets. And finally, the LIBOR scandal has finally claimed a scalp. The Barclays Chairman, Agius, has said he's likely to go. And there are calls for the CEO, Bob Diamond, to go as well. I'm Bernard Hickey. That was 90 at 9 from interest.co.nz.